Good afternoon, everyone. Thank you so much for joining us. This is Hydreight Technologies Investor Webinar, Inside the Growth Engine, Driving 2026. We're just going to give it a couple minutes while we wait for the rest of everyone to join as we see them in the wait room right now. So we're just going to give it a few moments here.
Thank you. Hi, everybody. Thank you for joining. We've been excited for an update with all the shareholders, all the Hydreight army here. So we've got some very exciting things to talk about. The purpose of the webinar, I think, just to give everyone kind of an overview as I bounce around the way I do. Update on obviously 2025 Q1 overall how the business is going, and then we wanted to address some of the things that we get commonly asked, and we felt that it was sometimes the questions are coming from a place. Obviously, it's a very complex system, the healthcare system in the US, and it's quite niche. And some of the questions I think were more of an education of where the market is and where things are going. So it was much better to address these things, and I think I think when we talk these things out, it'll basically really showcase the ecosystem and the moat and where the company feels very, very strong and very, very very confident in its approaches. So I'm just going to move on with a couple of slides here. So I will just bear with me. Okay, so I think from a starter position, obviously we won't spend too long on this, as most people are aware of the company, and we've done a pretty good job, I feel, of showcasing the ecosystem. But I think it's important for topics that we'll go into later in the webinar to just go back and showcase again what is Hydreight Technology. So again, we're a 50-state medical company that is multidisciplinary. What I mean by that and why it's important later is we're one of one from an ecosystem model perspective. Nursing boards, medical boards, pharmacy boards in all 50 states, having a strategic, strategy ecosystem since 2018 to be able to play in the spaces that we bring our verticals. Again, we've talked many times about our strategy was to target three different areas of the healthcare industry. So the mobile health and wellness, the non-traditional doctor's office, which is the medical spas and the IV lounges, and all the other basically bricks and mortars that must comply with state laws. And of course, the third area, which is showing rapid expansion in these coming years, which is the patient-specific self-administered virtual care. So that's where Hydreight plays, and that's why, from an ecosystem perspective, some of these opportunities that we'll talk about a little bit later that are having a tremendous impact on the business and will continue to do so will start to make a little bit of sense. And as we talk about some of the market factors which happen in any rapidly scaling industry, especially around GLP-1 and things like that, these things will start to tie together. So that's one of the reasons I think the webinar was so powerful, and it's easier to go over a lot of these things. So again, Hydreight is not a company that is doing something that others are doing. We're not a website that's selling GLP-1. We're not a website that is just a virtual telemedicine. We are an ecosystem and a marketplace. In 2018, to use a Gretzky quote, we kind of went where the puck was going, not where the puck was. And a lot of things that are happening in last year and this year, and some statistics and stuff we'll go into it here shortly is showcasing that. So again, I just wanted to kind of set a base level of what Hydreight Technologies is. It's a medical ecosystem that is multidisciplinary and plays in three different sectors of a massively growing healthcare industry. So to that end, a lot of people know that we're happy to obviously 2025 was a tremendous year from releasing our third vertical, growing our first two verticals, and obviously focusing on execution. We're obviously in the middle of the audit right now, but we are happy to basically be in line with analyst reports. Everything looks fantastic. We had an incredible Q4. Showcasing again the growth and the execution of everything that Hydreight set out as its goals for 2025. Very, very strong execution there. figures. Everything aligns with analyst reports, and super excited to finalize this audit in the next couple of weeks and get that across. Moving into 2026, that has been further verified, and the growth has continued. So essentially, we sent out some guidance in January. That has been, again, we just finished Q1 2 days ago, but it looks very much in line with our guidance, which is very, very exciting. And this is important for a few reasons. We're not just seeing operational strong momentum. We're seeing continued growth across the platform. We're seeing strong activity from new existing partners, and increasing utilization across multiple product categories. So it's very, very important that not only is the growth continuing as per expectations, as per guidelines, but some of the strategies that we've employed that we'll talk about a little bit later, after we kind of talk about the overall compliance infrastructure, those are starting to come to fruition. And it's very, very exciting for the company to be able to, confidently say that, we're hitting our guidances. The company is growing as expected. Really, really exciting times. Now, so kind of building off of the growth, there's a number of things that come from maybe a lack of understanding of either the US healthcare industry or the ecosystem of Hydreight as a whole. And one of them, of course, is the GLP-1 industry. So I just want to go a little bit deeper on that, and use it kind of as an explanation tool to showcase where Hydreight's going, where the industry is going, and where we see it all kind of playing out. So sometimes we get reached out to, and there's a reaction to kind of sensationalism. The fact of the matter here with the FDA in the US and the GLP-1 sector is there is no problem with the GLP-1 industry in the United States. There's maybe an intercompany problem. I won't say any names for liability reasons, but anybody that has even had a side glance at the Super Bowl probably knows who we're talking about. So of course there is company problems if somebody crosses any lines from a marketing perspective, or flies a little too close to the sun there. But the FDA is not concerned about patents or concerned about intercompany. They're concerned about patient healthcare. So there's been a very evident and very trackable and traceable, if anybody wants to look hard enough. And this is some of the part of I really wanted to get into on the webinar, because again, I feel that some of the shareholders, and it's not their duty to do this, of course, it's our duty. So I wanted to really go deep on kind of explaining the industry as a whole. First and foremost, as I kind of previously explained, we're not a GLP-1 company. It's one of the products that is on our direct-to-consumer ecosystem, of course. And it's of course an important one. This is what started the party, so to speak, from the patient-specific awareness for the public in the US. Now, as we go into some other stats, you'll see that has continued to explode and will continue to explode with some of the things that we go into. But let's stay on GLP-1 specifically. The FDA made it very, very clear. In May of last year, obviously the shortage ended. Now, they took very strategic and very straightforward steps to actually continue the support of the GLP-1 compounded medications in the US. You'll see some sensationalism from big pharma. Most recently, you'll see maybe kind of something that was in the news around B6. And again, it was completely unfounded. In actual fact, it flew in the face of third-party reports that had proven the efficacy of all of these products. But getting back to the GLP-1 side, from the FDA perspective, they obviously took lines to put guardrails around this. So what were the guardrails? One was around product prescription per patient. Previous to the shortage, coming off of shortage, compounding pharmacies could make vials and just ship them to medical spas and everything, just absolutely big vials, use it for 100 people. obviously that was stopped from the shortage, but it was stopped more from a compliance perspective to put guardrails around this. It wasn't to stop the industry. So patient-specific customization of the product at a pharmacy level, and those were the first things that were brought in. And they made it very clear that as long as there is a patient need, there is no problem. Customization of the product, prescription goes to the patient, absolutely. And from there, everything is fine. Now, they took a second approach again, because their approach is patient safety. Their approach is not getting into business or into patents. Then they approached the API. So the API is the active pharmacy ingredient, and previous to this, there was no guardrails on that. So it could come from anywhere, unverified, go to a pharmacy, and again, patients' health at the end of the day could be affected. So they made a green list, and again, the reason I'm kind of going step by step is not only is it going to give some greater insight to everybody and all our shareholders regarding the GLP-1 ecosystem and space here in the US, but it's going to further validate some of the things that the company has done. And the company has done these because it's uniquely positioned as a medical system in the United States. So the second thing, obviously, was the green list API. What that means is you have to be on the green list. You have to be verified that you're supplying it from, you're buying it from a manufacturer, and you're sending it to a pharmacy. So there's a whole oversight that the FDA brought in to basically provide guardrails again around that. So they've taken two steps there. That is in the advancement of the GLP-1 space, not getting against the GLP-1 space. They're in the advancement of it. Now, in 27th of February, 2026, John F. Kennedy Jr. just brought out, they just announced, Robert Kennedy Jr. Just announced that 14 of the 19 peptides that were currently on the category 2 are now back on category 1. So everything is moving towards, the support of this industry. We'll talk a little bit more about peptides in a little bit. So I wanted to showcase that about GLP-1s, because again, there's sensationalism from big pharma. There's maybe an uneducated view sometimes as to what's going on, but that side of the business and that side of the industry is thriving. As long as you are within the guardrails, it continues to thrive. Now, more importantly than that, because I just wanted to kind of set the scene for GLP-1s, those guardrails did not stop at just the product and the people selling the product. They continued on to the pharmacies themselves. So now let's zoom out again and let's look at our third vertical. Our third vertical is patient-specific self-administered. What does that mean? That means that each and every medication that is on that vertical is compounded. Compounded means that it is made, specifically with protocols, policies, and procedures for that medication from the medical entity that is requiring it. The FDA, of course, put the guardrails around the getaway train that was GLP-1 and how it was being manufactured and sold across 300 plus million people in the US, and they apply those guardrails to the entire self-administered industry. Now, why is that important? Obviously, Hydreight, when it's being looked at and explained to in 2026 and 2025 as to our third vertical, we explained and looked a lot of the time at just businesses coming onto our ecosystem, licensees as we call them, the things that we solve with our modular nature of our platform for them to be able to be in that space. And the incredible traction that we got by providing that service. What didn't get talked about is the other side of the coin, right? These guardrails that the FDA have put in place now apply to the pharmacies, okay, and the healthcare organizations. So now what has transpired and what we kind of alluded to in Q4 that has now started to impact Q1 and our entire 2026 is these pharmacies want to work with ecosystems that they can actually just work with one ecosystem, one medical group, and actually just build out these product lines together in a compliant fashion. Because now with these new guardrails, the pharmacies themselves are liable and compliant if they don't do certain things, and if they're shipping to businesses that are not on that side. So these opportunities to increase our product lines, to increase the level of control that we have from a product perspective, these all turned about in Q3 and Q4, which was absolutely fantastic from an opportunity perspective, because it means that Hydreight is now able to actually control the product, from a ground level, building out the product lines for all of these patient-specific products with a pharmacy. That works everything through our ecosystem. So essentially, deploying capital to build product lines for these various self-administered patient-specific products that already have existing businesses on them, but now have to join our ecosystem because of our relationship with the pharmacies. So again, that's not doable if you haven't got a multidisciplinary 50-state medical platform like the Hydreight ecosystem. So again, not to belabor the point, but Hydreight has been looking for a number of years as to where all of this is going. We talk a lot about the third vertical, the patient-specific, the virtual care, but these additional guardrails that are put in place only increase our moat and increase our opportunity. And we have not just communicated this, but we've actualized it in Q4 and Q1, which of course our revenue reflects that, and 2026. So again, I know I went deep dive there with explanation, but I wanted to kind of get everybody at least a core understanding of where the US is going with the patient specific self-administered products. Now, just on that topic, so the third vertical, which of course is the most scalable, the most impactful vertical, and not only in 2025 but moving forward, that is, of course, we have different categories on the self-administered with our patient-specific, the ED, the hair loss, those things. But the real needle mover is going to be the move into the peptides. We see that validated by, the recent 27th of February, where 14 of the 19 peptides who were currently on category 2 now just got moved to category 1. You've heard me say in previous webinars or communications that 2026 is going to be the year of the peptide. This is where everything is going. So Hydreight is not only uniquely positioned, as you can see from the healthcare organizations and the pharmacies wanting to partner with us in this way, but also from a business license perspective, and the inundated interest that we have there. So just wanted to talk on that for a second as well. So Hydreight has over 11,000 licenses now, as of the end of Q1 on its third vertical. So again, validating our moat, validating the model, and an inundated amount of licenses. Excuse me. No, just bear with me for 1 second. Thank you. So again, from an infrastructure perspective, we're not a product company anymore. We're an infrastructure. We've built across all 50 states. We have physician networks, pharmacy integration, compliance built in, and everything on our platform is physician-led, patient-specific, and compliance-driven. So we have executed on that obviously in 2025 and into 2026. And we really wanted to explain the opportunity with the peptides, because I think a lot of this goes unnoticed. There's not only the recent news with the 14 of 19, but there's another 100 in clinical trials, and it's very important that our ecosystem is showcased in the manner that it is. Regarding obviously current licenses, because again, we've looked in 2025 and communicated in 2025 more so from the B2B perspective, not from an infrastructure level perspective, which I just kind of outlined with the pharmacy side. So regarding platform scale, we now have over 11,000 licenses signed across the platform. again, at these levels, scale is now no longer the question. The only question is how productive can these licenses come, and how sticky is the platform. And again, I think I've just showcased that once you start controlling the product lines at a production perspective, everything becomes eminently scalable. Now, obviously, we did a raise in earlier this year, and that really was to turn capital into revenue, and deploy that with our newer model, where we're controlling everything at the pharmacy level. So we're not just investing in growth; we're directing capital straight into revenue. We're financing the product lines at the pharmacy level. We create exclusive verticals that way, and that drives orders directly to the platform, of course. At kind of a basic, simplistic level, instead of just enabling partners, i.e. our licensees, we're now participating directly in the economics of the product itself. So capital becomes product, product becomes revenue, and it's a cyclical model, which again, without the infrastructure, I'm sorry for keeping going back over this part, but without an infrastructure that we have and an ecosystem that we have, these things are just not possible. So Hydreight again uniquely positioned itself over these number of years to be able to take advantage of where this is going. And yes, part of it was vision, part of it was knowledge, because we're talking to 3 different boards constantly across 50 states, but also part of it was outside of our control, right? GLP-1 and Ozempic and what that showcased to the American public for accessible healthcare. Of course, we didn't see that coming. We didn't see COVID coming, where there was relaxed laws, where businesses opened up, where when those laws went back, a model like ours was the only show in town. So again, whilst the company has done great from predicting where the gaps are going to be, we also had some things outside of our control that led to that. So again, getting back to that whole system and cyclical nature, partner, which is a licensee, becomes a product, becomes revenue. It stops becoming transactional at that point and starts becoming more of a system. An important shift, I think, here is we're not just facilitating activity anymore on our platform. We're increasingly controlling how the products move through our system, again at a product level, and ensuring the orders flow through Hydreight infrastructure, and that's where we capture the value. From a modular system, we have not every partner uses every component, of course. We want it to be very flexible, because it's a ever-changing industry, and things are being added all the time from a compliance perspective, as well as the product level itself. It's important to be flexible and to be modular, not to be take it or leave it, to be able to be a partner to anybody in the evolvement of their business, whether you're a brand new business looking to get into this space, or you're a business who already has customers and has transactions and needs us for another reason, i.e. compliance or operational stability or growth. We want it to be modular in a sense where we could be everything to everybody. Again, 2025, we've communicated that a number of times. Our focus was mainly the top of the funnel, the business that already had business. That's a smart approach for any business that's looking to scale aggressively and quickly, which we are. And then obviously the licensees that are maybe in bucket number 2 and 3, we focused heavily on onboarding those, and that's part of our stickiness. Again, one of the reasons for the financing, we had a financing in early January, and it was a bought deal, and the financing was oversubscribed and included strong institutional participation. This wasn't about raising capital to sit on it. This was about raising capital to deploy it. So again, based off the strategy that I just described, where the compliance is now dripping down, way down from not only the businesses that are in this space to the pharmacies themselves and the healthcare organizations that are actually supplying the product to the patient. we again are uniquely positioned to be able to take advantage of that from a compliance perspective. You're now in a position where the pharmacies themselves only want to work with certain organizations that are set up, and Hydreight is one of a very, very short list. So again, it was about seizing that opportunity, getting these partnerships going, getting the product lines that have existing businesses and orders within them, migrating them to the ecosystem as well, and then it's just scalable from there. So it was an opportunity that was more about seizing the moment and deploying capital than just raising money for the sake of it and sitting on it. Obviously, with not only sentiment in the market or things outside of our control in terms of global economic and a war and things like that, there's a big gap between the reality of the company and obviously the share price at the moment. So we did put in a capital strategy around the NCIB. And again, that was we're balancing two things here. We're deploying capital into the growth of the business, and we're also being opportunistic in the market. We're investing in the business, and at the same time taking advantage of the disconnect that we see between the market price and the reality of the business, and again creating shareholder value while doing that. That's capital was not for that. That is just a strategy again in reaction to the disconnect. Moving back to kind of where we see the third vertical going and the incredible growth. The peptides, we recently did an investment in Insu. Again, peptides are not only the next gold rush, patient-specific self-administered is the next gold rush. Peptides and the expansion of these peptides, of which GLP-1 is a peptide, in case anybody didn't know. This is where everything is going. So again, it's a major long-term opportunity. And the key point here is we're not trying to pick winners at the molecule level. We're building the infrastructure to support them. So as new therapies come out to market, we're already positioned to support the demand. Our investment into Insu fits into that strategy. It gives us exposure to new delivery models and alignment with the innovation in the space. One of the things to just really kind of touch on here is the injection method for most of these medications is kind of the only effective way for results. Anything oral or anything taking orally that's not injected, the efficacy of it is dramatically different. So obviously, the patent here, which was one of the reasons for the investments in the delivery system, is it's called a buccal delivery system, which goes into the cheek or the gum, and essentially it has similar results to the injection. One of the things here is we will be exclusive distributors of that delivery system. So again, just going through some FDA approvals and things like that. But this is a really big deal, and I think when we gave the announcement, a lot of that went over people's heads, because if you're controlling the delivery system at the pharmacy level, so whoever wants to actually sell that product has to be working with Hydreight, or that delivery system, should I say? That's a big deal. So you'll get a lot of traction from people that want to move over from injectables to a buccal delivery system. So we're very excited to continue that growth. From again, circling back to an overall sense here, if we take a step back from the platform itself, and everything is increasing. Capital is being deployed. Excuse me. Market demand is accelerating, not only from a license perspective, but also, as I've hopefully showcased, from a fundamental pharmacy level and medical organizations. These aren't independent either; they're reinforcing each other. It's cyclical in nature, so more licenses drive more demand drives more capital deployment, and more capital drives revenue. So company is in a great position that way, and some of the moves that we've made in 2025 have really come to fruition, and 2026 is super exciting. It's one of the reasons that we set a floor, because the opportunities that are in front of us are actually eminently scalable. So again, we wanted to be responsible with our guidance, yet reflective of what's actually happening in the business, and I feel that's why we gave a guidance that was described the way it was. And as for Q1, being in line with our guidance, guidance, we're super confident moving forward into 2026. A couple of things just to touch on from a pharmacy level. Just bear with me for a second, please, guys. Just circling back to the peptides again, and the reason I keep going on about that is we're an ecosystem for the self-administered patient-specific market, and that's where everything is going. Grand Research, put out a report where essentially the virtual care and telehealth market by 2030 is going to reach somewhere in the region of 350 billion. So Grandview Research, you can check out the report yourself. That's where, again, I got to get some new analogies here, but that's where the puck is going. That's where the company is uniquely structured to position itself, not only from a B2B level, which is the licensing, but also from a B to organization level, which is at the pharmacies. As these guardrails continue to squeeze compliance from the FDA and from all of these other things, we welcome that because it only increases our moat. That's one of the reasons that these organizations and pharmacies reach out to a company like ourselves, because we're so uniquely structured. These are not ideas. These have been actualized. They're showcasing in results, Q4 revenue, Q1 revenue. These are real things. The company is basically validating as we go here every single quarter. We have validated our model. We have validated the moat that we've created. The company has executed, I feel, tremendously with a launch of a third vertical, which has so much traffic, so many licenses, so much to be careful of. I was very proud of how the company worked in 2025. And that is basically reflecting into Q1 and on into 2026. The 11,000 licenses, again, inundated interest, further validation of the unique position that Hydreight finds itself in, the attractiveness of the model, the disciplined capital strategy, again, deploying capital, product line investment, and accelerating the license expansion. The NCIB, again, we're basically just trying to bridge that gap between the reality of the business and the capital market space. And I guess to close, the model is proven, the growth is real, the capital is deployed, and the growth is compounding. Pardon the pun. So I will pause there and thank everybody for their time. And I'm sure this was recorded, and we're welcome to follow up with anybody.
Thank you so much, Shane, for giving us that insight. Thank you, everyone, for joining us today as well. And we have recorded this webinar, so we will be sending it out just in case you may not have been able to stay the whole time. We will be emailing it to everybody that has signed up, as well as our shareholder list. So we do wish you guys all a wonderful weekend and a happy Easter with your families, and be safe out there. And we'll get this up as soon as possible. And also keep an eye out for our earnings call that will be coming in probably the next couple of weeks. And so, yes, thank you so much, everyone, for joining us today. And we wish you guys a great rest of your day and weekend. Bye now.
Thank you, everybody.